All right, let's get right into it. If you really want to understand what moves markets, you have to think like a pro. And what the pros know is that under all the noise, there's one single number that pretty much dictates everything. So today, we're going to break that number down so you can start seeing the market through that same professional lens. So let's start with a big question. Imagine for a second, what if you could track just one metric to understand everything from interest rates to the stock market to even how you spend your own money? You know, it sounds way too simple to be true, but this is the exact framework that professionals use. Well, that one number, the one that everyone from central bankers to top hedge fund managers are absolutely glued to, is inflation. And by the end of this, you're not just going to understand what it is, but why it is the absolute key to anticipating what the market is going to do next. All right, so let's dig in. We need to get to the core of this. What is inflation really? Because it's more than just prices are going up. And this right here is the key. See, it's a two-sided coin. It's not just about the price of stuff going up. It's about the value of your money going down. Every single dollar or pound or euro you have buys a little bit less than it did before. That is the real story. Yeah, exactly. And like Kirtan Shah says here, its influence goes so much further than the price tag you see at the grocery store. It actually kicks off a huge chain reaction that touches every single part of the financial world. Okay, so this is where it gets really interesting for an investor. Let's trace that chain reaction. And the first, and honestly the most powerful ripple, comes from how central banks react to it. This is where the story truly begins. But why? You gotta ask, why do these huge, powerful institutions like the Federal Reserve or the European Central Bank care so much about this one number? Well, their main job is to keep the economy stable. And you know what the biggest enemy of stability is? High, unpredictable inflation. This right here, this is the playbook. It's almost predictable. When inflation starts to run hot, they pull out their main tool. They raise interest rates. Now, that makes borrowing money more expensive for literally everyone, from huge companies to you trying to get a mortgage. The whole point is to tap the brakes on spending and cool the economy down to get those prices under control. Okay, so the central bank makes its move. What happens next? Well, that first ripple immediately creates a second one, and this one hits right in your investment portfolio. Here's the best way to think about it. Interest rates are basically the cost of money, and when that cost goes up, everything else gets repriced. All of a sudden, a super safe government bond is paying you a better return. So that makes riskier things like stocks look a little less attractive, right? Investors then start to demand a higher potential return to take on that risk, which usually just means they're willing to pay a lower price for those stocks today. This table is basically your cheat sheet for what to expect. In a high inflation world, you can generally count on a few things. Those rising interest rates are going to put some pressure on stock prices. Things like oil and gold, commodities, they often do pretty well. And like we said, the actual cash in your hand just buys less. The whole financial deck gets reshuffled. All right, so we've seen the effect on the markets, but now let's zoom out even further and look at the biggest ripple of all, the one that hits the real world, our daily lives. It really does touch everything, doesn't it? It can slow down a whole country's growth. It changes our personal habits. Maybe we eat out less or we put off buying that new car. It even changes the value of our money on the world stage. And I really want to drive this point home. This isn't some abstract academic idea that just lives on a chart somewhere. It hits your wallet directly. The little bit of mental math you do before you buy something, that's inflation talking. It's the hidden variable in every single financial decision you make. Let me make this super tangible for you. That $100 bill you tucked away just a few years back, well, after a period of high inflation, it might only buy you what $85 would have back then. That missing 15 bucks, that's the silent tax of inflation. And that's exactly why understanding this is so critical if you want to protect your money. Okay, so after all that, what's the big takeaway here? What's the new framework for how you should be thinking, whether you're an investor or just managing your own budget? It all comes down to this. You watch inflation. Why? Because that number is your biggest clue for what the central banks are going to do. And what the central banks do is the first domino that knocks over all the others in the market. It all starts there. And look, this is the real shift in mindset. Before you have this framework, the market can feel totally random, just confusing noise. But once you have it, you stop reacting to the news and you start to see the pattern. You can actually anticipate the chain of events and understand the why behind the headlines. So there you have it. That's the metric. That's the first domino. The game is no longer about reacting to what happened yesterday, it's about anticipating what's likely to happen tomorrow. You now know what the pros are watching, so the only question left is, what will you be watching for?